Tikehau Capital has delivered very strong performance in H1 21 on all fronts, from top to bottom line. First and foremost, our funds have performed strongly. That is what our clients are expecting. It is critical to perform in order to satisfy our current investors, to attract new LPs, and to keep expanding our investor base globally. Meanwhile, we've been actively deploying capital on behalf of our clients. Our closed-end funds have invested a total of 1.9 billion euro during the first semester, twice the development of H1 2020. Our investment team have remained laser-focused on selectivity and ESG, knowing that today's investments are tomorrow's performance. So first, robust performance. Second, active investments. And third, the natural consequence is very strong fundraising. We managed to attract record net new money with 2.4 billion euro raised in H1 for our asset management business. This is actually twice the amount we raised in the first half of 2020. As a result, our assets under management reached 30.9 billion euro at end June 21, up 20% year on year. On the financial performance side, the group posted solid financial results in H1. Net result rose sharply to 176 million euro. Two main drivers are explaining that material increase. First, more than 60% growth in fee-related earnings, showing that our growth model is increasingly profitable. And second, the resilient performance of our portfolio. Our balance sheet remains robust and liquid, with around 3 billion of equity base and close to 1 billion euro of available cash at end June 21. These are key differentiating factors, allowing us to grow faster, to align interests, and to seize attractive investment opportunities. To begin with, our fee-paying assets under management, which is an important KPI for revenue generation, have increased by 20%. Two main reasons behind that material increase. First, a continued fundraising for our private equity and capital market strategies, as well as Sofidy in real estate. And second, an active deployment for our private debt strategies, where we are charging fees on invested capital. Meanwhile, our revenue mix keeps improving, contributing to the steadily growth of our average management fee rate. It has reached 104 basis points at end of June. It is the first time that we are exceeding the 100 basis point mark. In euro terms, the management fees generated in H1 an amount of 121 million euro, a 39% increase year on year. On top of this strong revenue generation, an important feature of our model is that we are increasingly profitable, and H1 21 illustrates that perfectly. Our fee-related earnings, which is a key indicator for us, surged by 62% to 44.5 million euro. This is the result of a strong operating leverage, with our revenue increasing more quickly than our operating cost. This corresponds actually to a FRE margin of 36.7% at end June 21, up 5 percentage points compared to June last year and up 10 percentage points compared to 2019 level, which is a strong achievement for Tikehau Capital. For a number of years now, we have ensured that ESG factors are fully embedded in all of our investment and decision-making processes. But more importantly, we develop funds across all our asset classes that actually make a difference to contribute to a low-carbon economy. As such, over the first half, we completed the fundraising for our private equity strategy focused on energy transition, with over 1 billion raised, exceeding our initial target. In private debt, we are raising capital for our new impact lending strategy, which provides favorable financing conditions to companies that achieve their environmental goals. Lastly, we have also pioneered an impact approach in the high-yield universe. We want to remain active in launching new funds that makes concrete and measurable contribution to the decarbonization of economies. We have also made sure that our ESG commitments are reflected within our own financing. Today, our ESG-linked debt accounts for around 60% of our total debt. Finally, leading ESG rating agencies have recognized our strong commitment in that field. Among asset managers, we are ranked number 4 in the Sustainalytics ranking and number 3 in the ISS governance ranking. Our capacity to develop and propose tailor-made financing solutions to corporate is one of our key strengths. First, we are building an increasingly global, diverse, and experienced platform with close to 630 people across our 12 offices around the world. This represents a major advantage for Tikehau Capital. It allows us to source a very large number of investment opportunities across all our strategy. Also, the Tikehau team is increasingly diverse, with 26 nationalities represented and 41% of women within our staff, which is not so common in our industry. In addition, our expertise is increasingly valued and recognized by European governments. We have naturally become a partner of choice for them when it comes to designing, sponsoring, and managing initiatives to support the economy recovery in Europe following the pandemic. Already in 2020, we were selected by the French government and leading aerospace players to manage a private equity fund that is specifically dedicated to supporting that industry heavily impacted by the COVID crisis. Building on that success, the Spanish government, in turn, chose us in June 21 to manage a new private equity fund which will invest in the aerospace and defense sector locally. And very recently, the Belgian federal authorities selected us to manage the Belgium Recovery Fund aimed at providing debt financing to Belgian companies hit hard by the pandemic. So Tikehau Capital is definitely committed to contribute to financing the economic recovery. Our investment portfolio reached 2.9 billion euro at end of June 21, with 64% of that amount invested in asset management strategy developed and managed by the group. As you know, alignment of interest is embedded in our DNA and central to our capital allocation policy. As such, over the first half, our balance sheet has committed more than 200 million euros in new commitments in our own asset management strategies alongside our clients. Our portfolio delivered very strong performance over the period, with 78 million euro of realized portfolio revenue, up 19% year-on-year, and 174 million euro in unrealized revenue, reflecting the change in fair value of our portfolio assets, which rebounded sharply year-over-year. While the excellent results we delivered over the first half make us very confident in the outlook for 2021 results. We target to reach at least 33 billion of assets under management at year end. Looking ahead, we are also well on track to meet our 2022 organic targets to exceed 35 billion in assets under management and to generate over 100 million in fee-related earnings. We have many projects in the pipeline in terms of new strategy, notably to further expand our impact investing platform, a new initiative to diversify our client base. So yes, we are confident in our outlook. We definitely have the right team, a consistent strategy, and the relevant setup to keep delivering strong growth going forward.